We are currently seeing everything that has been going on in politics recently has caused uncertainty in the market, and with uncertainty in the market, you experience drops like these. However, now that there are exemptions on tariffs, there's a bit more certainty. Therefore, we now have price rising again. Of course, that doesn't apply to everything. Sometimes you may have certainty and price may still drop. Sometimes you may have uncertainty and price may... And of course, none of this is financial advice. I just really want to talk about this topic because I think it's really interesting. Because let's look back here. As you can see, April 24 is the last time we've reached these kind of levels, maybe even back here, January 24. So we are what some people would consider to be a discount in the market. If you believe that the S&P 500 always goes up, or generally always goes up, of course you're going to see down periods, but generally the S&P 500 will trend upwards. Then seeing this dip, which has taken us to the highs of 21, well now, the lows of 25 were the previous highs of 21, almost makes it seem like a good deal. Because if you were to have seen this in 20 during COVID, when there was massive uncertainty, and you were to have purchased down here, you would have made skyrocket profits. However, if you were to just see this and you thought that it wasn't going to go back up, then most likely we would have seen the end of Western society. The S&P 500, of course, isn't a one-to-one correlation of is the economy strong or is the economy weak. It is an indicator because it contains 500 of the largest companies in America. And having those 500 companies merged together can show us a pretty good indicator on what people's sentiment is towards investing, whether they are bullish or bearish. Now, if we were talking about a singular stock, for example, let's say something like Apple, then I would be a bit more skeptical of investing because there are periods where you could see the stock of Apple drop and not rise again to that point, or it may not rise for several years. Who knows? However, the S&P 500, because it hedges itself against several stocks, it means that you're able to automatically expose yourself to larger companies rather than just one singular company. If Apple loses its market share tomorrow, which is possible, I mean, look at Nokia lost its market share, and you are holding Apple stock, then it wouldn't have been the best investment. However, the S&P 500 has allowed investors to spread their investment across 500 stocks and that to automatically switch based on which stocks are the largest. So I hope this provided some insight into what's happening in the stock market at the moment and an explanation on how the S&P 500 is correlated to this.